Have you ever thought about investing with a small amount like 2,000 Rs? Well, guess what? It's entirely possible, and we're here to guide you through it. This video will introduce you to the concept of investing with a limited budget. Because, let's face it, not all of us have heaps of cash lying around. But that doesn't mean we can't get a piece of the investment pie. You might be surprised at the opportunities that are out there. Investing isn't just for the rich, it's for everyone. You might be wondering why investing is so important. Well, the answer lies in the power of compounding. Even with a small amount, like 2,000 rupees, your money can grow over time, creating a snowball effect. Investing is like planting a seed. The seed of your money can grow into a vast tree over time, providing you with financial security and independence. It's never too early or too late to start investing, especially for beginners. Investing can be a great way to learn about the financial market and how money works. Investing can also serve as a safety net in times of financial emergencies. Instead of borrowing money and falling into debt, you can use your investments. It gives you the ability to take calculated risks and reap potential benefits. So let's see how you can grow your 2,000 rupees. Before we dive in, let's understand some basics. Investing isn't some haphazard game of chance. It's a calculated risk, a strategic dance with the markets. And to do this dance, we need to understand some fundamental principles. First up, the principle of risk and return. Picture this. You're standing on the edge of a cliff. The higher the cliff, the greater the risk of falling, but also the grander the view. Investing works similarly. Higher risk investments have the potential to yield higher returns, but they also carry a greater chance of loss. The key is to find a balance that suits your comfort level and financial goals. Next, we've got diversification. Imagine you're at a buffet. You wouldn't fill your plate with just one type of food, would you? Similarly, in investing, it's wise not to put all your eggs in one basket. Diversify your investments across different asset classes like stocks, bonds, and mutual funds to spread the risk and enhance potential returns. Now let's talk about the long-term perspective. Investing isn't a get-rich-quick scheme, it's more like planting a tree. You need to give it time to grow and bear fruits, so when you invest, think long-term, be patient, and let your money work for you over time. And finally, the principle of regularity. Consistency is key in investing. It's not about timing the market, but time in the market that counts. Regular, disciplined investing, no matter how small the amount, can lead to significant wealth accumulation over time. Keep these principles in mind as we explore investment options. Remember, every investor's journey is unique. There's no one-size-fits-all approach. So as you embark on your investing journey, stay informed, stay disciplined, and most importantly, stay invested. Let's dive into the various investment options in the next scene. Now, let's see where your 2,000 rupees can go. Believe it or not, this seemingly small amount can be the seed of a promising financial future. You just need to plant it wisely. Let's start with mutual funds. These are great for beginners as they allow you to invest in a diversified portfolio of stocks, bonds, or other securities. Think of it as a collection of investments managed by professionals. You get to own a piece of this collection by buying units of the mutual fund. A lot of them have a minimum investment requirement of less than 2,000 rupees, making them an affordable entry point into the world of investing. Next up are stocks. Now, investing in stocks can be a bit more challenging, but it can also be quite rewarding. With 2,000 rupees, you can purchase shares of certain companies. Remember, when you buy a stock, you're essentially buying a small piece of that company. However, investing in stocks requires a good understanding of the market and the ability to withstand potential losses. But hey, every master was once a beginner, right? Finally, let's talk about recurring deposits. This is a type of term deposit offered by banks where you can invest a fixed amount every month. It's a safe and simple option with guaranteed returns. This makes it a good choice for those who prefer stability over high risk. Each of these options has its own potential returns and risks. Mutual funds spread your risk across different investments, but returns are not guaranteed. Stocks have the potential for high returns, but they also come with higher risk. Recurring deposits, on the other hand, offer fixed returns but at a lower rate. So there you have it, 3 investment options for your 2,000 rupees. Remember, the aim here isn't to make you rich overnight. The idea is to start small, learn along the way, and gradually build your wealth. After all, the journey of 1,000 miles begins with a single step, or in this case, with 2,000 rupees. So, which option is the best for you? Let's delve into the nitty-gritty of each investment option, considering the potential returns and the accompanying risks. Mutual funds, for instance, are a popular choice due to their potential for high returns. They pool together money from multiple investors to buy a diversified portfolio of stocks, bonds, or other securities. However, they also come with risks. The performance of a mutual fund is dependent on the market and the capabilities of the fund manager. Next, we have stocks. High risk, high reward. When you purchase a company's stock, you're buying a piece of that company. If the company does well, your investment could skyrocket. However, if the company doesn't perform well, you could lose your investment. Lastly, let's look at recurring deposits. These are a safer option, with fixed returns and nearly zero risk. You deposit a fixed amount every month, and at the end of the term, you get your money back with interest. However, the returns are typically lower than what you might get from mutual funds or stocks. Each of these options has its own set of pros and cons. Mutual funds and stocks can offer high returns but come with higher risk. Recurring deposits are low risk but offer lower returns. Remember, the best option depends on your individual goals and risk tolerance. Investing isn't a one-size-fits-all game. It's about finding the right balance between risk and reward that suits your financial goals and your ability to stomach volatility. Let me share a bit of my own journey with you. There was a time when I was just like many of you, unsure of where to start. I had a modest sum, around 2,000 rupees, that I wanted to invest. I was drawn to the stock market, but the risks seemed daunting. So I decided to dip my toes in the safer waters of mutual funds. Starting with a small amount allowed me to learn the ropes without the fear of losing a significant sum. Over time, as my understanding grew, I diversified into shares of companies I believed in. The returns were not astronomical, but they were steady, and I was learning valuable lessons about patience, risk, and the power of compound growth. It was a humble beginning, but it set the groundwork for the investor I am today. And that's how I started with just 2,000 Rs. So, let's wrap things up. We've delved into the importance of investing, even if you're starting small. We've discussed the basic principles, understanding the balance between risk and return, the power of diversification, and the benefits of looking at things from a long-term perspective. We've examined various investment options within reach for just 2,000 rupees or less. These include mutual funds, stocks, and recurring deposits. We've compared their potential returns and risks, highlighting the differences to help you make an informed decision. Based on this analysis, for beginners just starting their investment journey, mutual funds seem to be a promising option. They offer diversification, manageable risk, and decent returns. Of course, it's crucial to do your own research and consider your personal financial situation. Remember, the first step is always the hardest, but once you start, the possibilities are endless. I hope you found this video helpful. Remember, the world of investing is vast and varied, and this is just the tip of the iceberg. We have a wealth of other strategies to explore right here on this channel. Your experiences, thoughts, and questions are valuable, so do share them in the comments section. Let's grow together on this journey. Don't forget to like, share, and subscribe for more investing tips. Thanks for watching.